This is lesson 6-4, Form 1040, Reporting Taxable Income. The objectives are to file Form 1040 to compute tax liability and to understand how to report different types of income using Form 1040 and Schedule 1. We are basically going to go through actually filling out a Form 1040 in this class. Here are some key terms. First of all, dependent. This is a person who relies on you for financial support. Form 1040. This is a document that will help you to figure out your tax. Schedule 1, additional income. This is a document listing non-salary type income. Schedule B, interest and dividend income. This is a document used to list interest and dividend income that exceeds a certain amount. Schedule C, business income. This is a document used to list income from a business. Standard deduction. This is a standard amount that taxpayers can deduct from their income before computing tax liability. Tax liability. This is the amount of money you are responsible for your taxes. Tax return. This is a document used to report your income to the government. And finally, voluntary compliance. This is cooperating with the procedure to pay taxes. So how can you compute your tax liability? Why might a taxpayer choose to overpay his or her taxes? Why might a bank savings account be a better option? Why do you think that the IRS allows a taxpayer to claim him or herself as an exemption? Well, first of all, some taxpayers may choose to overpay so that they might get a refund at the end of the year. This is a form of savings, but it isn't necessarily a good form of savings because it doesn't involve any interest. And you can claim yourself as an exemption basically because the way the law is written, you are allowed to take and pay for dependents, you are allowed to pay for yourself, and as a result, your taxes are reduced based on the amount that you are responsible for. Let's look at example 1. Margaret and Brian O'Sullivan are married. They have one child, Carol. Margaret works for a sports cable station and Brian is a cameraman. Their address is 12 Rumbottom Street, Arlington, New York, 12603. The information from their W-2 forms is shown in the table below. Fill out the first page of their Form 1040. Use all zeros for each Social Security number. All right, so here we have a W-2 form listing all the various wages, taxes that have been withheld, Social Security wages, Medicare, state taxes withheld, basically all the information that is on a W-2 form. Now, we're going to use this information to fill out a actual 1040 form. Now, what you have to understand as you're going through this is each year there's slight changes that are made in these forms. So the line numbers may not always match up for the particular year that you're filling out a form for. But the basic information given and where you provide that information on what form pretty much stays the same. So let's see how this is going to work out. All right, so here's your basic Form 1040. And notice how it is filled out. This is a couple, they are married filing jointly, so that this box up here gets checked. They put both their names down, first name, last name, and each of their Social Security numbers, all right? They put down their address, where they live, and they put down the dependents, in this case, their one child, that child's Social Security number, and what that relationship is. In this case, it is simply a child. So this basically gives all the pertinent information about the taxpayer. Okay, example 2. we're still talking the same Brian and Margaret. They had interest of $812 from Seaford Bank, $877 from Buffalo Bank. They received stock dividends of $444 from GM and $1,200 from Home Depot stock. Find the total income from wages, bank interest, and ordinary stock dividends. Use this information to fill out those lines on Form 1040. Well, first, let's add up the different numbers here. So if you add up the wages for the two of them, if you take his and her wages, you add those up, we come out with $96,521. You add up the total interest from the two banks, and you come out with $1,689. And you add up the dividends from the two stocks that they own, and you come out with $1,644. So now we place this on the Form 1040. One of the first lines on the 1040 is wages. And this is where we put in the $96,521, which is the total wages for the two of them. Then you fill out line, in this case, it's line 2A, and it's interest. So you put the bank interest down next. And then the next line is qualified dividends, and you put that down, all right? So this is where you enter the first pieces of information relative to income. Now, since they received interest, they need to fill out the interest and ordinary dividends schedule, which is Schedule B, all right? So they have to take Schedule B, they put their name, their Social Security number. Actually, it's going to be the first name's Social Security number. In this case, it's Brian's. They put down the two banks where they received interest and how much from each bank. And then they total it down here, so you can see it's $1,689. On the bottom of the same form is a place for ordinary dividends. This is part 2 of the same schedule. And here's where they put down their GM stock and their Home Depot stock, how much they got for each one, and then they add those two figures together to come out with their total ordinary dividends. So now let's continue on. Margaret won $900 in the state lottery. She was also unemployed for a few weeks and collected unemployment insurance. Brian has a small side business making leather crafts, and the taxable income from that is $698. He also received royalties from a commercial jingle he wrote, and the taxable income from that is $1,987.67. What is the total of this additional income? Notice, this is not wages, or interest or dividends. This is additional income from other sources. All right, this information goes on Schedule 1, all right, where we talk about additional income and additions to income, all right? Again, we put their names down, we put the first Social Security number down, and then we start listing. For example, this line right here is for business income. So there's your $698 from the small business that they had. Next, we have some royalties right here. This was the $1,988. Then we have some unemployment compensation. This is when you're unemployed and you receive unemployment checks. That's $1,341. And then lastly, other income, which in this case was $900. Add them all up, we come out with this additional income of $4,927. Now we take this figure of $4,927 and we go back to Form 1040 and we put it on the line that says other income from Schedule 1, all right? So now we want to know, what is the O'Sullivans' total income, all right, on Form 1040? Well, we've got the wages, which we already put down. We've got interest, which we put down. We've got dividends, which we put down. And we've got other income from Schedule 1, which we put down. We add all those figures up, and their total income comes out to be $104,781. All right? Assuming they don't have any adjustments, their adjusted gross income is $104,781. In this case, it's on line 11. Now, the O'Sullivan family are going to take advantage of the standard deduction to lower their taxable income. How much is their standard deduction? So basically what they're going to do is they're not going to itemize their deductions. They're simply going to take the standard deduction. Standard deduction is shown here from schedule, let's see, the standard deduction or itemized deductions. They're taking the standard deduction. The standard deduction in this case is $24,400. We add it right here onto this line, and we come down any adjustments, and we come down. The standard deduction for them is simply going to be this fixed $24,400. So now a logical question is, what is the O'Sullivan's taxable income after they take the standard deduction? Now, so if we subtract the standard deduction, which is this $24,400, we're back on Form 1040, by the way, and we subtract it from their gross income of $104,781, we come out with their taxable income, all right? The amount of income that they're going to be taxed on is $80,381, and that's shown here on line 15. So now we want to know, what is the tax on this taxable income? Now there are tables and ways to calculate the tax, and we won't go into those right now, but basically, based on their taxable income, we come out with a tax of $9,400, okay? So this is the amount of tax that they owe, all right? And there's possibilities for certain adjustments. In this case, they have no adjustments, and the total tax they owe is shown here on line 24, $9,400. Now, as is typical, Brian and Margaret had tax withheld from every paycheck. Okay? So their employer withheld tax from their paychecks each time they got paid. Now, we want to know, did their employers withhold enough money to cover their $9,400 tax liability for the year? So they owe $9,400, but how much was actually withheld from their paychecks? Well, if we look back at their W-2 forms, we see that one of them had $4,761.12 withheld. The other one had $4,101.18 withheld. So the total amount withheld from their paychecks was $8,862.30. And if we go back to the Form 1040, we see that we can put down on line 25A, it says Form W-2. So that means how much was withheld from their paychecks. And there's our $8,862. Notice we do round it off to the nearest dollar, okay? When you're filling out taxes, you can do that. It is perfectly acceptable. It makes the calculations a little easier. All right? Now, there's also, if they got any Form 1099s where there was tax withheld or anything else. So basically, they come down here to line 33, and their total payments of tax was $8,862. So now we want to know, what is the difference between the tax and the amount the employers withheld for the O'Sullivans? In other words, are they going to get money back as a refund, or do they have to pay additional tax? Well, again, going back to Form 1040, we see that their total payments, as we said earlier on line 33, were $8,862. However, if we go back up here to line 24, their total tax that they owed was $9,400. So notice that the payments that were made are less than the amount that they owe, So the difference of these two numbers is the amount that they have to pay with their tax return. So they have to pay $538, mail a check in with their tax return. They're not getting a refund, they're actually having to pay a little bit of money extra. So this is why in some cases employees will have additional amounts taken from their checks so that they don't have to pay at the end of the year, so that they would get a refund of some amount. But in this case, they did have to pay a small amount, $538.